And gold hit another fresh record as investors bet on a Federal Reserve rate cut on Wednesday. From a global perspective, the record-breaking run in the yellow metal is heading for an inflection point, with the first Fed rate cut since Donald Trump became president likely to seize the spotlight. But what the Fed says on the policy path will matter for the yellow metal to surge to new highs, including what were once wild bets. The surge in gold records comes ahead of festive demand in India, which raises an important question. Can the precious metal rally to $5,000 by Diwali? Take a look at our next report for more on this.
Gold on Tuesday surpassed the all-time high of around $3,685 an ounce hit in the previous session. The global reason is the scope for more monetary easing from the Fed in the coming months, has investors betting for gold to extend its record-breaking rally. Persistent trade and geopolitical uncertainties, along with significant buying from central banks, have added to the momentum. The yellow metal has surged more than 40% this year, outpacing major assets such as the S&P 500 index. To put that into context, Wall Street stocks have rallied over $14 trillion since the April lows, and gold has easily outpaced those gains. Recently, bullion surpassed its inflation-adjusted peak reached in 1980. Goldman Sachs Group has forecast bullion could approach $5,000 an ounce if just 1% of privately held treasuries shift to the precious metal. The real question is, could that happen by Diwali, which is a little over a month away? The demand for the precious metal surges during the festive season in India. Latest trade data shows gold imports rose by about 37% in August from July. India's gold imports rose to a 9-month high of $5.4 billion ahead of the festive season. But compared to a year ago, India's import of the metal showed a decline of about 57% last month. That is a telling figure and could be due to lower gold demand at record high prices. The other theory doing the rounds is the recent trend of India's rising demand for silver, which is being called the new gold. But more importantly, for gold to surpass $5,000, it needs to rally another 35% over the coming month. That is nearly as much as the metal has gained this year so far, which seems a little far-fetched. Still, globally, there are enough reasons for investors to celebrate gold. Trump's relentless attack on the central bank, which has raised serious questions about the Fed's independence, is boosting gold. The US president's move reflects uncharted territory in monetary policy history. As a result, the diminishing investor confidence is hurting the dollar and adding more uncertainty. Gold has always been around to soften the blow during times of uncertainty. The yellow metal's 5,000-year history as a vital hedge against risk is unparalleled. Central banks worldwide are also on a significant gold buying spree. In fact, for the first time since 1996, global central bank gold holdings have surpassed their US Treasury holdings. That positions the yellow metal for more gains to new highs. However, adding another 35% from here to $5,000 on an ounce in about a month seems a little tough. Gold over $3,500 was also once considered a wild bet. The yellow metal has surpassed that level and is set for more gains, with Trump in the White House and his policies driving more uncertainty. Writing off any level of gold comes with its own risks. Business Bureau, WION, World is One.
For latest news, download the WION app and subscribe to our YouTube channel.